Good morning, everyone. Welcome to the morning meet of IndiaNivesh. This is Mehul Kothari from the research desk. Today is 18 Feb 2020. Well, although the week kicked off on an optimistic note for the domestic markets, but the selling pressure once again forced benchmarks to close near day's low. The index Nifty initially registered an intraday high of around 12160 during the first few minutes and tumbled from there to make a low of 12037. Eventually, it ended with a cut of more than half a percent from its previous close. Meanwhile, the Nifty Bank Index too lost around 150 points. The market breadth remained in the favor of declining counters, which indicates broad-based selling. This was for the fifth consecutive session that the market breadth was extremely negative. On the sectoral front, if we see apart from Nifty IT, none of the other group indices managed to close in green. Even Nifty IT was in green with marginal points only. Among the losers, Nifty PSU Bank and Nifty Pharma counters were the worst performers, while the broader market indices like Nifty Mid Cap 100 and Nifty Small Cap 100 ended in red with a loss of around 0.86% and 1.28% respectively. Technically for Nifty as of now, Nifty is approaching a critical support of 11,990. A close below the same would confirm an intermediate top formation near to 12,300 mark, which was the recent high. In such scenario, the lows of 11,600 could be under threat. As per the options data, currently for this series, 12,000 is marginal support for the market, but below 12,000 there could be further selling. On the upside, 12,200 is a very strong resistance because of high open interest built up in 12,200 strike call. The open interest is around 30 lakh shares. So at least for this weekly expiry, we don't see Nifty going beyond 12,200 mark. In case of any pullback in today or the upcoming session, 12,100 to 12,150 could be a resistance. So one should wait for a fresh trade. However, the positional sell on rise is still on. With regards to Bank Nifty for the day, 30,400 to 30,300 could be an intermediate support. Resistance is placed at 30,800 followed by 31,000. On stock front, like Oro Pharma, which we recommended sell around 545 odd levels, it has closed below 500 mark. So overall, a fall of 10%. Similar kind of formation we are witnessing in Sun Pharma. So it is trading around to 408, 409 odd levels. A close below 400 could be highly bearish for the stock. So one can look forward to Sun Pharma for a close below 400. Earlier we had a recommended short position in SGFC limited around 2440, 242 between 2440 to 2420. So it is trading now around 2340, 2350 odd levels. Since it is oversold in intraday charts, we would recommend to book profit in HGFC. So that's it on the technical front. Now I'll hand it over to Mr. Dharmesh Kant. Thank you very much, everyone.
Hi, good morning, all. This morning, Asian markets are trading with rate cuts, and the cuts are like yesterday it was 2% up, today it is 1% down. So 50% of yesterday's gain are being lost in today's morning trade. And Apple has come out with the first guidance where their quarterly earnings will be impacted because of the lack of sales in China. So this was expected because there has to be some economic slowdown, and that is Apple is the first one to say. SGX Nifty is trading with cuts of 50, 51 points. So most likely, if this SGX Nifty level prevail, we may have an opening on Nifty below to 12,000 mark. So continuation of steady selling pressure we can see today. More of a hope kind of a build up is there that market should take a relief from here, but numbers, fundamental numbers were not conducive to this kind of sustenance of the pullback rally which we saw post budget correction, and that is what is playing out. Maybe headline index may still stabilize and pull up from here or consolidate, having 12,000 as a mean. But stock specific action looks particularly bad, and especially where the numbers were weak, we can see more selling pressure coming. As Mehul pointed out, like Sun Pharma, so numbers were not great, and stocks like this can see a further beating in a weak environment. However, the caveat still remains that companies which posted a decent set of numbers or a good set of numbers in this weak environment, there the buying will be continued, or you will not see much weakness stepping in there. So avoid shorting those counters where visibility of numbers still there. However, where the visibility of earnings growth is not there, you may see some selling pressure coming in. LIC Housing Finance, we have been recommending this stock quite a number of times, and it has been a part of our multi-cap portfolio. It has rallied 20-30% kind of return it has given from a buy recommendation. As of now, it is trading below where we initiated a buy call on this, and just because of disturbing news flow surrounding the company rather than the fundamental numbers going bad. So, and these rumors are doing the rounds, and because of that, the company has taken a beating. Yesterday, the rumor was that it will be merged with IDBI Bank. Now, all the three companies involved in this merger have come out categorically denying this. These are all baseless rumor. Just to point you out, a merger with IDBI Bank is not at all possible given the present set of rules which is there by the RBI. However, if RBI goes and tweaks the rule, then anything is possible. So, but as far as present law is concerned, this cannot happen. So ILSC Housing Finance Management yesterday denied during the course of the trading hours. IDBI Management has denied there is no such stock, and LIC, the parent company of both, have also denied there is no such stock. Maybe vested interest and operating plays are doing the rounds in shorting the stock. I do think that this is a great buying opportunity. At least 10-15% can be easily made from the current levels. Yesterday it closes around 380 kind of a level in the cash market. So 410, 420, you can expect this in a near term. So, apart from that, telecom companies have started paying their dues. Bharti Airtel has paid almost 10,000 odd crores. So Vodafone Idea is also around 2,000 odd crores they have paid, and some part payment is there. And then the other, I mean, the recalculation of rules can be there because what they have said, there has been duplication of same amount in AGR calculation, which has taken this amount to so high. So if you cut on the duplication of the same revenue, the amount can come down significantly. So this has to be contested, and we have to see how the clarity emerges. As of now, the market looks tentative, and some selling pressure may continue going forward. That is all from our end. Thank you so much. Have a nice day.